Worried about mortgage rates. I'm worried about mortgage rates. You know, we've seen steady increase in fixed rates over the last 7 weeks, 8 weeks, and now another burst of fixed rate increases this week. I thought that it was going to calm down, didn't calm down, going harder. Highest bond yields since 2007. By the way, 2007 was the great financial crisis, for the love of Jesus. It was a very concerning time. I was there. I mean, I was right in the heart of the mortgage business then, and it was a very, very worrying time. Banks were worried. Everybody was worried. Unemployment jumped. House prices slumped. It was a real tough time, and now, here we go. We're looking like the same kind of record bond yields. As I've said in the past, bond yields create mortgage rates, fixed mortgage rates, not variable, fixed. And these rates are just going up and up. And why I'm worried is that this is a major issue for people getting renewals, like very major. I mean, people in 2018, some people in 2020, are getting their renewals coming in on their mortgages, and they're all significantly higher. All rates, people had rates in the 3% range, like mid threes, low threes. A few people had, 3 years in 2020 that were very low, extremely low. But mainly 5-year people from 2018. These are big, big increases. I'm talking, we're going from 3.39 to 6.29 to 6.59 to, if people choose to take a 2-year, some of these people are being offered 6, 8, 9. 1 year is in the 7% range. I mean, holy mackerel. That's a big payment change. I mean, it's not a double in payments, thank God, but it's like a 55% payment increase. Unless people take options. What are my options? Well, you could try reamortization. You can reach out to your lender and work out something like, hey, I got 15 years left. I want to go back to 25. I mean, I just got to get these payments down. Yeah, there's some methods you can take on renewal to try to help yourself. But boy, all bad news. This is all bad news. And it certainly doesn't look like it's going to get any better. And the next big worry is September 6th is coming. So what is September 6th? People are saying, you talk about Labor Day, summer's over, what's going on? No. September 6th is the Bank of Canada meeting. And right now, the analysts across Canada, including the people who run the bond market, including the group of bank economists, the leaning idea is another 25 basis point increase. Now, I'm not going to make my firm decision on that. I'm not going to make that prediction. I'm not going to speak for myself and say, yeah, for sure, going up 25 basis points. I just don't know. I'm a kind of a guy who likes to wait till it's close, till we have more data, till we understand it better before I'll really make the call. But let's understand this. Another 25 basis point increase in prime rate from the Bank of Canada is really bad. It's really bad psychologically. It's really bad for everybody whose payments are jumping. It's on variable rate mortgages. It's very, very bad for some people who might be facing ultimate trigger points where their mortgage has been growing so much for the last few months. If it's going to grow some more, it'll actually hit the final trigger and there'll be a huge increase. There's not many of those, but it starts to become a real danger when prime rate goes this high. And there's some analysts who are predicting it. So it's worrisome, and it's not good for Canadians, not good for anybody who pays a mortgage, not good for renters, not good for renters whose landlords who may often have variable rates or quite likely get renewals. I mean, everybody gets a renewal if you got a mortgage. If you don't pay it off, you get a renewal. And those renewals keep on coming in an endless cycle of increases. So not good for renters, particularly for those renters whose landlords have variable rates that are just feeling the heat of increase. And renters get murdered. I mean, huge increases, 16% per year in Alberta, if I recollect. It's like 11% here I realize some rents are controlled, but if you're looking for a new place, you got to pay the current rate. and the current rate's gone through the roof. So I hate to say it, makes me look like a dick. I apologize, okay? But let's tell the goddamn truth here. This rate situation in Canada is getting worrisome. Higher fixed rates coming in. We're going to see higher fixed rates this week, next week. The danger on September 6th of the Bank of Canada raising the rate again 0.25%. Not saying it's going to happen. Haven't even made up my own mind. But that's the word on the street. All of this stuff is very, very worrisome. More later, but this is scary shit.